Well, CNBC's 8th annual Disruptor 50 list is out, and it highlights 50 companies whose breakthroughs are influencing business and market competition at a very fast pace. One of this year's disruptors is Klarna, the highest valued private fintech firm in Europe with a growing U.S. market share there as well. It makes its second appearance on the list after previously making the cut in 2016 at the number 8 spot. Joining me now is Sebastian Siemiantkowski, CEO at Klarna. Sebastian, thank you very much for joining us today. Let's talk about what exactly is going on at Klarna. What do you do and how business is going?
Sure. Thank you for having me. And it's a very exciting time for us in the U.S. Obviously, what's happened in the U.S. that a lot of people are not aware of is that credit cards have not grown at all with the younger generation. Millennials, Gen Z, 70% of millennials today in the US do not hold a credit card. They have a debit card. And when people shop online with debit cards, they face a lot of issues that people with credit cards never think of. Like, what if I buy this product and it's not the one that I wanted? It's actually my salary money that's at stake. Or what if it takes 3 weeks to process their return? Somebody's holding on to my salary money. Or what if I can't buy this item because I just don't have money right now? I'm waiting for my salary check. So people with debit cards struggle to shop online. And what we offer them is an alternative where they can, for example, pay in 4 installments, take $100, split it over $25 every second week, connected to their salary check, but with no interest. So it is a much better alternative to using credit cards as well, because you're only using credit when appropriate for appropriate purchases. And this is something that we've seen has grown massively now in the US. A lot of demand. With many big merchants we work with, like Sephora, H&M, ASOS, Adidas, etc., we see that share of checkout sometimes comes up to 20%. People love this product, even though it's very early beginnings, and it's very similar to what we've seen in Europe, and now it's happening in the US. So it's very exciting times for us.
So Sebastian, just out of my own curiosity, take us through what the business model is. In essence, you're providing zero-cost financing for a certain time period. How are you able to do it? What exactly are the mechanics? Are you a bank?
Yeah, we actually are a bank in Europe. In the US, it works slightly differently, but we are a fully licensed bank in Europe. The way it works is basically the merchants, they see a lift in average order value, often by 40–50% actually, and they see an increasing conversion rate. And with over 8 million users now in the US, we can also suggest new merchants and drive new customers from the millennial Gen Z generation to these merchants. And so basically, because of that uplift, merchants are willing to pay us a premium over what their credit card cost or payments cost is today, because they see the lift in sales. And that's how we obviously pay for the cost that the offering this product cost for us. So that's how the business model works.
So it's also interesting here because, Julia Borston, who's been kind of running point on this Disruptor 50 program, notes that this year, out of the 50 companies we have, 12 of them are fintech, financial technology companies, and 5 of those are actually payments-oriented. Are these trends that you see lasting long-term, the idea that payments and the paradigm for payments will change and evolve into the future?
Well, for sure, I think so. If you look at classic retail banking, it actually consists of 3 items: payments, lending, and savings, right? And payments has often been an underinvested area from the big banks and these areas where these products haven't really evolved much over the last couple of years. And I think with the new, I'll tell you a very concrete example with Klarna, for example. We do about 1 million transactions a day now. That's the size of the company, with 85 million users worldwide. For every transaction, we actually do not only have the amount that you buy, but the actual SKU level details, the line item details, something that Visa, MasterCard, and other people don't have. That allows us to give a much richer customer experience, because when you shop with Klarna, you see images of the items that you bought when you look at your purchase history. That's a very different experience that drives engagement. People engage with that. They're interesting. They want to find new products. We can then incorporate with our merchants to drive new customers to them and make additional purchases. So there is an immense amount of opportunity to innovate in the payment space, which has to some degree been not as a big focus for the traditional banks. And I think that's why you're seeing that trend that you're referring to.